Now on view at the Jewish Museum, Anish Kapoor Early Works showcases the artist's rarely seen pigment sculptures from the 70s and 80s. Opening December 12, Joan Semmel in the Flesh juxtaposes Semmel's iconic nude paintings and self-images with works selected by the artist from the museum's collection. Visit at 5th Avenue and 92nd Street. The Jewish Museum is open December 25th and January 1st. Plan your visit at thejewishmuseum.org.
Hey, Kate here. As we close out another bumpy year in the art market, we're revisiting a recent episode that looked at one of the factors in play, the erosion of logic when it comes to the price of a work of art. Our editor-in-chief, Naomi Ray, was on the podcast with me recently, sharing what she learned about how the rules of art pricing were made and then broken, and what may come next.
It could sell for anywhere between $25 million and $100 million, basically dependent on the buyer's mood. And that's a $75 million difference. It's kind of on vibes alone.
I'm Kate Brown, and this is The Art Angle, a podcast by ArtNet News. What's a painting worth? For art world professionals, that question of price has never been easy, but lately it's gotten harder than ever. As we've discussed on this podcast before, the art market has cooled right off. But this isn't just a downturn, it's a disruption. The system that once supported pricing is now in disarray, and dealers and advisors are feeling the strain. In a recent report for ArtNet News Pro, our editor-in-chief, Naomi Ray, explored how the traditional rules of art pricing have stopped making sense. With confidence waning and speculation drying up, dealers are quietly recalibrating. And what we're seeing may be more than a correction. As Naomi reports, it could be the unraveling of an entire logic. Naomi joins me to unpack what's going on in the danger zone of the art market and how different players, from mega galleries to emerging dealers, from art advisors to collectors, are adapting. We also discuss whether we might be heading towards a more sustainable and meaningful place in the art market. Hi, Naomi. How are you doing today?
Hi, Kate. I'm well, thank you. It's warm and sunny in London.
Unusual for London, I suspect.
Yes.
Great. Yeah, I'm excited to dive into this. You had an excellent piece about art pricing that got a lot of reactions online and also on the fair floor at Basel last month. So we've got a lot to get into today. I'm curious, was there a specific moment or a conversation that tipped you off to this shift in the market pricing logic?
It's not really a new conversation. It's something that we've been writing about at ArtNet News for a couple of years, actually. I remember, as far back as 2023 at Art Basel, I was kind of writing this first day market report. And, the takeaway was a kind of overwhelming kind of dissatisfaction with this price inflation that had been going on in the market for living artists. And I think I've been interested in price just in general, from a more kind of philosophical perspective. It's obviously the intrinsic value of art. It's a bit of an abstract concept to begin with, but you do trust in the art market that price has been kind of informed enough by kind of real world data points that it makes it a good enough proxy for value, and that it reflects things like demand or kind of what something is worth relative to other similar things. But when we have these kind of spirals in different levels of the market, especially kind of levels of the market which are kind of pre a value getting established in the traditional way. So usually, after an artist has died, you now have like a finite supply of works. And so the price points kind of get a little bit more clear. So whenever the prices for living artists start spiraling like this, and kind of speculative bubbles start emerging around it, it can kind of hurt confidence, especially when those bubbles kind of start to pop. And I think that's kind of what interested me in general in price. I think why now, writing about it ahead of Art Basel this year, I was trying to predict kind of ahead of time what people would be talking about at the fair. And we just come out of this auction season in May, which, had a number of kind of very high profile flops. There was a 70 million Giacometti that failed to sell, and a Warhol electric chair that was, pulled from sale. And this is kind of a new dimension to the market kind of downturn that we've been talking about, because usually the auction houses can be pretty good at orchestrating or ensuring kind of these sort of high level successes, often actually even taking a loss to do so. But, this kind of failure at this top level had people sort of asking a different question, not just about kind of the market. And especially in that top level of the market, people were saying for a long time that it's just a supply issue. There's not great stuff coming up. But actually, when you get great stuff coming up and it's not selling, you start to ask kind of, is it a demand issue? And in kind of thinking about that, I was like, well, what's causing a crisis in demand? And I think certainly on at least one level, it could be this pricing situation, which is kind of, when a buyer is looking at something, basically just destabilized their confidence that something's worth the sticker price.
Yeah, let's get into this question of pricing, because, in a normal economy, as you sort of touched on, when demand goes down, prices tend to go down. But this isn't always the same in the art business. So let's get into how an artwork actually gets priced, and why is pricing so difficult, and what's happening with it right now?
Yeah, it's difficult, I think, because like I said, the value of art is it's an abstraction. It's not a financial reality. And so there's kind of two different answers to this question. I think on the primary market, whenever we're talking about living artists and a gallerist is setting prices, there are certain hard data points that they can look at, market comps, what something similar sold for, how much it costs to make is sometimes factored into the price, although, that can vary wildly. I was talking to someone who was saying, yes, you can do that if it's painting practice, but what if the artist is making something like a video game and the production costs are ridiculously high, and almost, you can't actually make that back in the sale of the work, especially in kind of emerging markets. I think some dealers also try to offset some of the rising costs, of participating in the art market with prices. Shipping since COVID has gotten very, very expensive, and that's kind of factored into the sticker price. And then I think, the way prices go up is they look at sort of signals from the art world establishment, if you will, things like institutional recognition. Did they get a museum show? Is there a publication written about them? Have they had, positive critical reception, and kind of justify sort of prices going up from there? But in the end of the day, I think it is kind of what somebody's willing to pay. So I think a gallerist will need to know their clients, their tastes and expectations. And I think to a certain degree, the lifestyle enters into this. Some collectors are perfectly happy to pay an inflated price for an artwork just as kind of the ticket to ride in some of these exciting events in the art world. And the secondary market, similarly, there are hard data points. There's historical sales. But I had a very interesting conversation when I was in New York in early spring with Brooke Lampley, who is a former auction house executive. And she was people overuse this term, but rainmaker at Sotheby's. And now she is working at Gagosian. And I was asking her about selling and kind of pricing, and she had some really interesting things to say about how you can have as many hard data points as you want, and of course they are important to kind of ground you in a sense of reality of kind of what something could be worth. They don't reflect the market. The market is kind of a very now kind of thing, and you need to be very attuned to the ebbs and flows of tastes, and everything from knowing kind of what sort of colors people prefer. I think she said people prefer red than they do green, to understanding that, generally things can go up in price as they get bigger until they get too big and you can't fit it in your living room. And then it, becomes less desirable to certain types of collectors and things like that. It's a combination of numerous data points, met with kind of an understanding or grounding in the market, kind of knowing what people want, basically.
So a mixture of hard facts, some abstract elements, and then a lot of theater as well around all of it. And as you point out, with all of these rising costs, I mean, the galleries are working with like razor thin margins. I mean, there's also staff labor. Like everyone who touches that painting is getting paid from somebody. Storing work is expensive. Framing work is expensive. But you touched on the secondary market, which is an important one for establishing price. As you mentioned, ArtNet's price database is a very important player in that. Could you talk about like price transparency a little bit more?
Yeah, this is kind of a story I like to tell just whenever I'm explaining to people that I work at ArtNet and kind of what ArtNet is or what it was founded on, which is this database of prices. And I spoke to Hans Neuendorf, actually, the ArtNet founder, for my piece, and he told me a little bit about what it was like when he was starting out in the art market in the 80s and kind of people doing their own independent pricing research. They didn't really know what anything was worth or, in that market at that time or, how to price something. So they'd be going to art fairs and doing their own kind of personal research and taking notes, comparing notes. And Hans and a number of other people in the market at the time, saw an opportunity there for a sort of database that you could sell access to that would record prices. And I think, having that information, that's the hard data points that we were talking about. It brought kind of transparency to what was a very, very opaque market. And I think with transparency comes confidence because, if you are a buyer and you are looking at this Picasso painting and you're not sure, how much to sell, you could look it up and say, here's another Picasso painting of the same size, the same year, similar, and it sold for this amount. So you're kind of comfortable within a range of that amount. So it brings you kind of confidence and assurance, and that, results in more buying, which, means more selling. And as confidence grows, you get more comfortable, paying a little bit more than that, et cetera, et cetera. That's kind of the role that the price database played in all of this. I think people have different ideas about whether transparency is a good thing or a bad thing. I think especially when you have a market like this where prices got very inflated and, that can be devastating for people in many different ways. They might not be so happy. But I think as a journalist, I'm inclined to say that transparency is a good thing for the market. Obviously, if I were a collector that was trying to offload an artwork and having to accept a price that's a fraction of what I bought it for, a couple of years ago, or if I were an artist whose career trajectory is now kind of thrown into uncertainty after a speculative bubble has burst, I might have a different answer to that question.
Right. Well, that's something that's been informing this kind of disarray, right? Is that there was this prolonged period of time where prices were just climbing at this very steady rate, and that's an excellent atmosphere in which to be a speculator and to try to make money off of trading art. But as you reported in your piece, this has really changed, and especially the 80,000 to 800,000 range has been this so-called danger zone, according to someone that you spoke with. Why is that particular slice of the market so unstable right now?
It's a danger zone for anybody who's looking to kind of purchase art as an investment right now. And that is because of this price inflation for living artists, this issue that I've been talking about. And in this price range, I'm 80 to 800 or 100 to a million. I'm not really sure. Kind of, it's sort of fuzzy around the edges how to define that. But I'm talking about kind of middle market artists who are living, but they're more established than kind of completely emerging artists. So they may have a few institutional shows and publications and those kind of art world or art signifiers that we talked about to their name. So, their markets kind of grew quite quickly because they are perceived to be a little bit more of a safe investment than, a complete unknown where you really are kind of taking a risk or trusting your eye, that they will take off. So they've already had like a little bit of liftoff. But because they've gotten so expensive now, it isn't really the kind of safe environment that it was before. This kind of spiraling the speculation, which was encouraged by dealers who were raising the prices quickly and really selling this narrative of art as investment, got out of hand. So you're not able to resell those works for what you paid for them, or you have that inventory that you can access cheaper at auction, which is not how it's meant to work.
Right. And what kind of artists are we talking about when we are speaking about this range? Are there some recent examples from like the spring sales or anything like that?
Yeah. Yes. Looking at Art Basel specifically, I can say that Jenna Gribben, she's an artist, painter, talented painter, who had a very, good 2023 market, was very, very hot. I think her auction record is, up there in 500,000 or something like that. But, her prices, the auction prices have come down. I think there was a painting being offered by Massimo De Carlo at 250,000. You can find her work at auction now for cheaper than that. Similarly, I think Levi Gorvy Diane was showing another painter, 36-year-old Austin Wiener, and one of the works was available at 280K asking price. It's very expensive for these artists in that kind of period of their career. And you asked about the auctions, the May sales, I guess not so recent, depending on how you look at time in the art world. It's very accelerated. There were a lot of these stories. I think a lot of the kind of ultra contemporary artists who got very hot, we saw a number of them kind of being resold at heavy losses for their owners. I don't want to pick on Rashid Johnson because I feel like we've done that enough. But there was a big number. There was a painting by Rashid Johnson that someone sold at a 72% markdown on the price that they'd purchased it for, just a few years earlier. So that's what's happening.
Right. Not to pick on the artist at all, but it's just this cautionary tale of, speculation and the heights from which you can fall. You've talked about this a little bit in this last answer. Like dealers seem to be, in some cases, not recalibrating their prices at all, but they're sort of clinging to the old stickers while the auctions are saying something completely different. But are they in some cases putting their prices down?
Prices are going down. Whether or not gallerists are sort of writing, oh, this is at a markdown price, obviously for all to see. No, the asking prices for things that have asking prices are ostensibly staying the same. But, I think dealers are more open in this moment in the market to be accepting, more aggressive offers or bigger discounts. They might be slower to raise the prices. If they've been raising them every year, they might be a bit more hesitant to raise them this year or next year until the market catches up a bit. There's always stories you can tell. So I think, bringing prices down is like, that's not the story you want to tell. Like, this isn't worth, what it was. But you can say something else like, oh, if we have one show from an artist that doesn't sell, the next show, it's a different body of work. So the price point is different. You can say the materials are different, et cetera, et cetera. So there's stories you can tell to kind of navigate kind of shifting price points. But yeah, I think more broadly, what galleries, like the bigger kind of thing that needs to shift isn't just kind of the sticker price, but I think it's the pitch. I think this period, this art market bubble, galleries were really pitching art as an investment, and in many ways that's a very lazy pitch, but it works. You can make future upside. That's a easy thing to sell on, and I think now they're realizing that they're going to have to find another pitch. This is the other kinds of value that's not necessarily linked to making a profit on resale, and I think that's going to be challenging.
Mm-hmm. Is it pushing things more into private sales as well?
Yes, I think. The people are less likely to take a risk at auction. Then you will see more because auctions are public. Failure, private sales, you kind of have that cloak. But I'm interested to hear from you because you were at Basel, Kate. What you kind of heard on the ground, what were dealers, what was it like?
Yeah, pricing perhaps strategically was not like an overt conversation at Basel this year, but it was definitely the subtext, I would say. I think it was more so about vibe. Like people were talking about who was there, who wasn't there, and whether things were moving. So, prices in there, but it wasn't really like overtly being spoken about. And I think that what my takeaway was is that galleries are restraining their expectations. They're bringing different things and different kinds of works, and they're adjusting their programs as such. So, yeah, I mean, I think the data points that just point to a shifting psychology. I actually, was running the numbers on our price check reports, which are far from perfect data because they depend on what dealers tell us. And of course, the prices that they tell us are not necessarily considering discounts. And of course, sales are made without being reported at all. So it's not perfect data. But what was interesting to see was that between 2024 and 2025, the danger zone was actually in the extremes. Like on the high end, those who did bring major, trophy inventory, there were few sales reported by the close of the fair as compared to the year before. So that can mean a lot of different things. And again, stressing that it's not perfect data. But I think the other thing that was interesting was that this 80,000 to 800,000 rose a bit from last year, but it was also a lot more fresh to market pieces. Like a lot of work that was made in 2024 was sold, and 2025 was sold at Basel this year. Then in 2024, there was fewer works sold in 2023 and 2024. With like that year on the painting. So things are shifting. Yeah.
That's so interesting. I think that price point, the danger zone price point, was also the most dominant price point at auction in 2024, although according to ArtNet's data, other sales did still decline kind of 22.5% year over year. So it is shrinking, but yeah, I mean, people are still buying in that price range. I think what I'm saying is it's just not necessarily the smart place to buy right now. I think some people don't care, though. I think like some collectors just accept this. This is the price of the lifestyle. The gallery dinners and the glitzy participation in some of these art world events.
Absolutely. Or a work just, quite simply speaks to you. But I'm curious, like from this high-end hesitation that I gleaned from Basel and my read that, the downstairs floor was like quite difficult this year. I wonder what you've noticed about the recalibration at the top end of the market. Like what was in your reporting on that?
Yeah, I mean, I think at the very, very top level of the market, we started this conversation talking about how price is a bit of an abstract thing. I think like when you are way up there in your 100 million, zone, it's very abstract. There are data points, but it's not grounded in any kind of like real logic. It's about, confidence and I think mood. I had a great conversation with Robert Landau, who's a very respected dealer, and he is full of gems about this, very passionate, and he sort of told me it's at this level it's about knowing what to buy, not at what price, and his whole thing is that you can never pay too much for a great painting, even if you're paying more than whatever the market tells you to pay for it, because time will always correct your mistake. The theory being that something that is great will always go up in value eventually. And he said something kind of astonishing to me about this and about mood. So he's like, this isn't about price, this is about mood. And he said, he's talking about painting he had in his back room, and he was like, it could sell for anywhere between $25 million and $100 million, basically dependent on the buyer's mood. And that's a 75 million difference. It's kind of on vibes alone. So I think he kind of pushed the conversation to a little bit of a different place and to this thing about mood that you were kind of just talking about. So it's interesting to hear that that's kind of what was on the ground in Basel, the world being uncertain, all of the geopolitical chaos that's going on. It's disturbing, and people are kind of rethinking their values and their priorities, and they're kind of just not in the mood to buy. So that I think is telling, and I think there's more to what's going on here than just a fracturing of logic in pricing. It's this mood. The biggest question that I have really is how much this kind of talk about mood and the chaos of the world is potentially cloaking a more difficult reality that maybe actually there is a crisis in demand, that maybe it's not just that people aren't in the mood to buy, and it's not just that, prices are too high, but like maybe just people don't want what's being sold anymore. And I don't think we'll be able to really tell that till some of this cloaking lifts. And sadly, I don't think the world's chaos is going to be resolved anytime soon.
It's a very interesting point. I mean, it's a collector tastes are changing. How wealthy people want to spend their money is changing, and it deserves to be looked at, and what next generations their buying patterns are as well. So I'm curious, what's going on in the emerging section of the market. We haven't really spoken about that yet.
Yeah, I think for galleries that are playing it smart and haven't inflated their prices too quickly, then that section of the market is all of a sudden very interesting. I think collectors seem to say that they're looking at in those lower price points as it's still kind of fun. You can take a risk on something pretty safely, and I think that's, although it's interesting in 2024, the auction data that ArtNet has, it did see that even in that kind of low or the lowest end price bracket, so works priced under 10K, there was a contraction, even there. So I think it'll be interesting to see what happens there when we have like all of 2025's data, and to see whether that section of the market, which I think a lot of people are saying or expecting to broaden, actually does broaden. I spoke to one emerging gallerist for my piece, and she said that she was thinking about longevity, and so not playing tricks with buyers and taking that slow and steady approach. But I'm curious because your Basel coverage focused a lot on kind of the emerging, and I know you spoke to some emerging galleries on this podcast. What did they tell you about what they're doing to kind of insulate themselves right now?
I think that there's a bit of a creep from the blue chip galleries into the emerging market sector that I have heard about from a few dealers. Of course, if you're a blue chip gallery and you have a baked in kind of insurance policy from that branding and you're representing an emerging artist, it's much more appealing than an emerging artist at an emerging gallery, right? There's like less risk there. So I think that pain is being felt a little bit as these galleries are starting to represent younger and younger artists more quickly. But I think in general, the old rules are not working anymore, as you've reported. And so I think, the idea that artist prices should just go up quickly and that's a sign of success is no longer something that people are rushing to follow, because like a quick success like that actually is proven itself not to be sustainable in a longer term. Another thing that came up was the role of artists, like trying to discuss with artists what they should be selling their work for. They also have a voice in this that doesn't get mentioned enough. Did you touch on that in your piece a little bit, or did you in your research?
There was a whole sort of tangent that I could have gone off and I just didn't have space for in my piece about, the role of artists in all of this. So artists do have a lot of leverage. They do have, a say in this. And I spoke to Marianne Boski about this in particular, and she said, you do have some artists who will see kind of what's happening in the markets of some of their contemporaries. They say, oh, well, they're going up in price, and they, then also want to go up in price. And then on the other hand, you have other artists who are terrified of raising their prices because of this very thing that we're talking about, and kind of they don't want a bubble to emerge around their works. Boski said that sometimes you do have to raise prices because there's at a certain point, those collectors who bought early do kind of want to feel validated in their choices in some sense. So they want to sort of, and the market is kind of one way to, when they see, oh, the prices went up, oh, I was smart to buy that, and that kind of, there's something there in the psychology. So I hadn't really thought about this, but it's the gallerist really does have to navigate this with an artist and really persuade them that they know kind of what's right for their career as an individual artist. And I think it's a risk for the gallerist, because especially if an artist has kind of momentum in their market, they could leave. I mean, our colleague Brian Boucher recently wrote an article about poaching, about the problem of poaching, because you do have something that in the art market, especially in the emerging sector, you have gallerists that invest a lot in kind of nurturing an artist's career, and then just as soon as it starts to take off, you see them kind of leaving for another gallery. And the dealer Wendy Norris said something really interesting to Brian that she started adding buyout clauses to her contracts with artists so that essentially when that happens, she gets a return on her investment in kind of nourishing those artists from a young stage in their careers. So I think that's just interesting to see kind of how the market's shifting around some of these dynamics.
Yeah, for sure. Hard to enforce such a piece of writing, I'm sure, in the fine print, but it's like a really important impulse in that premise. So, narrative plays such an important role in all of this, as we've mentioned a couple times. Like mood is almost like the biggest decisive factor when it comes to pricing. In terms of narrative, we've had two big announcements in the past like week and a half. One is that Tim Blum is closing his gallery, making a new model of a sort, but ultimately like his brick and mortar gallery is closing. And then Adam Lindemann, who, used to be a collector and became a dealer for a decade and a half, is also closing his gallery. What was your read of these two events? Is there any connection to this question of like pricing chaos in your mind?
Yeah, definitely. I mean, it's like all of what we've been talking about. I'm sure it's very expensive, whenever you're not selling stuff also, and there's lots of overheads. I'm sure like there's a bottom line question fundamentally. But I mean, Tim did a lot of interviews about his decision and he cites burnout, this kind of acceleration. I think he was saying that everything that came with speculation and this kind of compression of artists' careers, expecting everything to happen in, a couple of years and 2 or 3 shows. And that's, I'm sure, very exhausting. I'm sure participating in all of the art fair circuit is very expensive. And I'm sure all of this, played a role. I mean, this kind of fatigue and, it's draining, to yourself and also, I'm sure, to your bank accounts. And Adam Lindemann, I mean, I think the long and short of his piece is that it just like wasn't fun anymore.
Not enough air kisses.
Yeah, it just didn't feel fun anymore. So he's going to be on the other side where he gets to just enjoy the collecting side of things again.
Yeah, and I think maybe there is no overarching narrative between those two, but I think we are just seeing like a system change and so a different actors coming in and out of the door. So, on that note, like, what do you see shifting? Like, do you see a confidence change or is this taste changing? Like, what's underneath all of these for you?
Mm-hmm. All of the above. I think there are a bunch of factors that cloud things. I think confidence is certainly wavering in some corners of the market. I spoke to some younger collectors who are feeling alienated from the system, who are complaining about sort of, feeling like the price gouging was happening. And you have others who are happy, to just be a part of it. I think taste is always shifting. I mean, this is one thing, this question of demand, which is ever changing. Taste is a very important part of that. And of course, as you have new generation coming into the market, they like different things. And then that huge specter of mood that we were talking about, this is the thing that isn't really being addressed. I mean, if you take the hypothetical, like if tomorrow we were able to wake up in some parallel reality where all of the world's troubles were resolved, would people be buying like they were, or are all of these kind of things concealing, a bigger crisis? We've talked about kind of changing tastes in the last intelligence report that we did at ArtNet. And I think in Basel, where there was opportunity, and I don't think we really touched on that very much, but where there was opportunity in the market, it was in some of these kind of more expensive, more established blue chip artists who hadn't performed so well in the most recent auction season. So, if you were looking to get your hands on a Christopher Wool or Robert Ryman or even Kenneth Noland, it would be a good time to buy. But, there's this whole question that only if that's what you really want. It's a good time to buy, but there was a whole kind of generation there was a whole system, a whole generation of people, a scene and collectors and dealers who are very invested in the success of those, blue chip American artists. And there is no guarantee that the next generation will continue to push these prices upwards. I think that you can trust that there's a degree of stability in these established markets, but the sky is not necessarily the limit, if the next generation doesn't pick up the mantle and sort of choose the same things. So I think it's a very good question that you ask, and it's one that I don't, fully have the answer to, but I think it's all of these things going on at once.
Mm-hmm. Well, there seems to be kind of a silver lining in that. I mean, it's hard to say that given a downturn and what downsizing means. I mean, there's lots of pain that will come with this for artists and dealers and collectors alike who might be trying to sell some work. But there is a chance, as I think, you made a beautiful point in your piece of getting back to the feeling and not just the figures, like really getting back to the soul and the meaning of art. And that things also in the interim will become a little bit more experimental. I mean, you mentioned Brooke Lampley earlier, and I just made me think, I saw her walking around at Art Basel Social Club. Mm-hmm. And, Art Basel Social Club is a delightfully chaotic art project that also sells art.
Sounded wild this year.
Yeah. And I think seeing a figure like that, quote unquote rainmaker, like wandering around this sort of like half like illegal building, looking at art as a sign of a changing time, not in a totally negative way. So on that note, to close out, I'm curious what you're going to be watching for this fall. We're in the summer break, so to speak, right now, although the art industry obviously never sleeps at this point. Do you see demand returning? What will you be looking for?
I think anyone who can afford to hold back is probably going to be holding back their inventory and playing the waiting game, kind of. So I'm not sure we'll have, a full amount of data to look at. I think in the auctions that are coming up, and the auctions are always a good place to look though for market data. It tells you a lot. I think look at those expensive lots, look at how many guarantees are happening. Is it getting more difficult to get people to throw out a guarantee in this environment? I think continuing to look at those classic blue chip names and seeing whether their resale values are continuing to slide. The day sales are always a very telling place. They're kind of less conspicuous than the evening sales, so actually give you a good sense of current demand. So yeah, I mean, watching the data. But I think what you said about kind of the sort of flip side of all of this and kind of returning to an appreciation of art's, art for art's sake is something that is important. So I think, one interesting thing to be looking for is, are people having fun? Is the fun coming back into market? And I think if the art market gets fun again, we'll all be saved.
That's a great point. Yeah. And if the art moves you and if there's a good feeling, and I think that art can be all kinds of things, but it is also about ultimately enjoyment. So that's a great point. Well, thank you, Naomi. It was wonderful to catch up about this. And it was a pleasure to have you on.
Yeah, thanks, Kate. I'm always glad to have a chance to talk about where the market's going and what's at stake.
That's it for this week's episode. If you like what you heard, you can subscribe to the show on Apple Podcasts, Spotify, or wherever else you get your podcasts. Also, take a moment to rate and review us. It will help other listeners discover what we're doing. The Art Angle is produced by Sonia Manalili with contributions from myself, Ben Davis, Carolyn Goldstein, and Naomi Ray. Thanks for listening, and see you next week.